This is going to be amazing.
And the sound effects are critical.
Michael and I have a plan for this episode.
Okay.
We're just going to let you guys do an odd lots and
We're
chill
just going to
out.
sit back.
Oh, man.
Can we just ask you questions?
Yeah, that sounds great, actually.
We're just going to hang and let you guys do what you do.
Sick.
How often are you in person at Bloomberg versus remote these days? Like, because you do a lot of shows.
Joe is here all the time.
I'm there basically every day. Tracy's like 4.
Yeah, 3 or 4, I would say. I usually go back on like either Mondays
3 or 4
Fridays.
what? 3 or 4 days?
In the office. Yeah.
Okay.
Yeah. It's not too bad. It's actually really nice having Monday and Friday episode free.
Wait, go back to where? Where do you go?
Connecticut.
Okay.
Yeah.
Are you guys noticing like the city is busier? And obviously it's seasonal. But Josh and I were trained today, and our train is not tourists, okay? We're from Merrick. These are people that come and work in the city. It was literally standing room only.
No,
like the aisles.
In the aisles.
The aisles were full.
Totally. I've thought many times just generally like if there is a recession, you will not see any evidence of it in New York City right now.
Yeah.
Like right now, New York City feels as busy as any time I can remember.
Yeah.
Not just post-pandemic, but period.
But I will say, though, there's a noticeable difference between ridership on the subways on a Monday versus like a Tuesday.
For sure.
Like Tuesday, my train is totally crowded. Monday, it's totally empty.
Yeah.
Well, we have like, for a lot of people, we have a 3-day in-person work week.
Yeah.
Which has become an unofficial, it's like a thing.
Yeah.
I run into a lot of people who are going in Tuesday, Wednesday, Thursday from the suburbs.
My wife and I went out to see a comedy show a couple months ago in the East Village. It was just a random night, and we had a babysitter. So we were like, oh, let's get dinner afterwards. And like, we could not get a table. And I don't mean like at nice restaurants. I mean, even just like random little like divey Chinese places on a Friday night.
Yeah.
We just could not find a place to sit down anywhere.
So
Where'd you go?
Yeah,
we ended up finding a table at a bar at this place called Naruto, which is a Hawaiian restaurant.
I know.
I know that place.
There's
really
Hawaiian
good.
restaurants?
Yeah.
It's New York City. There's everything restaurants.
There's 2 Hawaiian restaurants.
There's
There's a Hawaiian barbecue place close to you, right?
New
know,
York
Illinois.
can't have a recession unless there's a financial crisis.
Yeah, it feels like a...
Like New York, because no. I think the country could have a recession very easily, but I'm saying New York City, like what would it take for Broadway to be dark?
COVID.
What would it take? Right. Like you need like an actual crisis. I don't think you have like just an economic slowdown.
It doesn't
and
feel
New York
like
empties out.
No way. Yeah, I agree with that.
Famous last words.
Yeah, exactly.
So this is my crew. I don't know how many people work on Odd Lots.
We have 3 producers.
We have a skeleton crew today. We're missing Nicole.
Yeah, we're missing John and Nicole. That's right.
So you have 3 as well?
No, we have like 10.
Oh, wow.
I don't know. How many people?
Well, we have Duncan, Daniel, Travis is in California, and John and Nicole. John's in Japan.
Amazing.
Well, I think
in Japan?
Yes.
Wow. Are you like recording in Japan, or is that
We're
a time
expanding.
zone thing?
We have strategically located him in Japan.
We're looking for the best financial podcaster in Japan. John's going to find him.
Well, what's your output? How many shows?
Compound Japan.
How many shows a week do you do?
In Japanese?
3, about on average, about 3.
3.
Yeah.
And do you tape them all that week, or do you store any in the can from a week early?
Saying,
hey guys, those are rookie numbers.
We usually have like a huge backlog because we can't get them out.
We record a number of evergreen episodes where like we have no idea when we're going to release it because it's not about something that's in the news, you know.
So this is one of the toughest things about doing this, and I'm curious what you think. So we book this particular show out, as you know, 3 months in advance.
Yeah.
Like we're booking March right now, 4 months.
I was surprised.
Yeah.
Yeah. But
we have very important guests like you two.
We have
guys are
people
busy.
whose schedules are like, you have to really have something out on the horizon. The hardest part is something happens.
Yeah.
Right.
And you really wish you could talk to somebody that knows about it.
So why do you book so far in advance?
Can't you like rip up the schedule if it's an emergency?
I think this is what we're going to do from now on. So
Yeah.
this is what I think. What we're going to do, people that are coming from out of town, we will put them on the calendar 3 months out.
Yeah, that's fair.
People that are New Yorkers are almost going to be like slotted in a week before.
Yeah, like we could have come in whenever, basically.
Right.
So.
Yes. Well, we had to
But
get you from
that's what we do.
Connecticut.
We have like people who like we work for a long time and it'll be months in advance. But like something happens and like, can we get someone tomorrow in and do a quick episode? So we mix it up.
We have the most amazing show booker of all time. Her name is Nicole.
Mm-hmm.
And she is juggling the casting for like 6 different podcasts a week.
Wow.
Oh, wow.
And part of the main reason for booking people so far in advance is to just get it scheduled.
I know. Yeah, I know.
Because it's
no, it's good to just like, especially anyone who's like a name and they're busy or they're coming out, just get it locked in. And it doesn't matter what's going on at that time. People want to hear them. Yeah.
Well, the other thing we do is if we know we're going to sit on an episode for a while, we remind the guest like not to say specific dates and things like keep it kind of vague, like, earlier this month or whatever. And then you can release it.
Well, guess what? This is very live.
Yeah, this is going up tomorrow no matter what.
I'm so excited that we're sitting here today with you guys.
Is this going up tomorrow?
At all-time highs.
5 a.m.
All-time highs in the Dow.
I love it.
Russell 2000 joining the party. The S&P's right there. Equal weight. X-Mag 7. It's all happening, Joe.
The Dow Jones is 48,700 something. We are less than 3% away from Dow 50,000.
Amazing.
Is that an unbelievable number? Like an unbelievable number? So when you guys started Odd Lots 10 years ago, I bet you the Dow was 20. What do you think?
That's probably right.
We could probably look that up somehow.
Yeah, the Dow at 20,000.
Where was the Dow 10 years ago?
Are there charts of the Dow going back 10 years? Does that information exist online?
Don't you work at Bloomberg? You should know. You should know this.
Do you guys have Dow 50,000 guests prepared?
No, we don't.
We don't.
I would say even when we started in 2015, people still hated the Dow.
17,500 a year 10 years ago.
Holy shit.
Huh.
So in 10 years, the Dow has gone from
triple.
17. But what's so crazy is no one's talking about the proximity to 50K. It's almost like a given in people's minds. Whereas I remember approaching Dow 20,000.
It was huge.
Yeah. It was like a seesaw just under that level for months.
Yeah.
And it was like, is it going to happen? Is it going to happen? No, we're not talking about Dow 50,000 yet.
Yeah,
2.7% away.
Wake me up when it's Dow 100,000. That's my view. Well,
That's coming.
Yeah.
Well, it's a double. Stock market doubles all the time.
I know. That's
give
what,
it 2 years.
Is that your 2026 target?
The problem is memories are short and everyone's used to big numbers now.
Yes.
Like everything is at a record high. Everything is like valued at $1 trillion or whatever. And so they stop having an effect.
So Doug Bonaparte wrote something recently, our mutual friend Doug, everything now costs $1,000, which I think is sort of accurate. And then I was going to say like, every number that we talk about on Wall Street is now probably like in the trillions.
Yeah.
It's all trillions from now on.
You know what's really
That's one banana, Joe.
You know what's really embarrassing? It's like, if I hear about a successful company or I was like, oh, so-and-so, David says, Zaslav, he's going to be a billionaire after this Warner Brothers. I'm like, what? He wasn't a billionaire already? What's he been doing all this time?
Why do I know his name?
Yeah, I thought he was a big deal. I thought he was a successful businessman. He's not even a billionaire yet.
What is he doing all this time? What has he been wasting his time with?
Yeah, I thought he was, yeah.
All right, how are we looking?
We're good.
Yeah? All right, because you're out of time.
Yeah.
So whatever it looks like, that's what it looks like.
Yeah, we're good.
You clicking for us today?
Let's go,
All right.
Daniel.
Daniel Power, ladies and gentlemen. Also, our visual arts guru creates all our logos and all our stuff. Take a bow. All right. You really
Wow.
crushed that one, Daniel.
Big energy.
Jesus Christ. I'm going to go home.
Today's show is sponsored by Neuberger Berman. What does the Fed's rate cut mean for your fixed income portfolio? Lower rates are great for borrowers, but for investors parked in ultra-short funds, not so much. The yield edge fades as rates fall. That's why you might consider the Neuberger Berman Short Duration Income ETF, ticker NBSD. NBSD aims for consistent and efficient income and invests across rates and credit markets at the front end of the curve, targeting an investment-grade risk profile. If falling rates make ultra-short options less compelling, consider NBSD. Learn more and get important information at www.nb.com/NBSD, NBSD from Neuberger. Investors should consider the fund's investment objectives, risks, fees, and expenses carefully before investing. This and other important information can be found in the fund's prospectus and, if available, summary prospectus, which you can obtain by calling 877-628-2583. Please read the prospectus and, if available, the summary prospectus carefully before making an investment. Neuberger Berman BD LLC is a distributor of the fund and a FINRA member.
All right. Ladies and gentlemen, welcome to one of the best investing podcasts in the world. We are sitting with financial/economic podcasting royalty, literally. Tracy Alloway, along with co-hosting Odd Lots, writes about markets, finance, and the economy at Bloomberg. Tracy was the head of Bloomberg's Asia Pacific news desk and led the cross-asset markets team. I first met you, though, when you were at FT.
That's right. I actually remember when we first met because I drink way too much Blue Moon, and ever since that night, I cannot drink Blue Moon ever again.
Why? How much did we drink?
I can't remember. It
was
for obvious
reasons. We were annihilated somewhere?
Enough to never want it again.
I have that reputation. I do turn it up. I turn it up.
You turn it up.
And with Tracy, old friend of mine, super excited to have you here for the first time. I can't believe it's the first time. Joe Weisenthal is an editor at Bloomberg, co-hosting their flagship markets program, What'd You Miss? I know. I remember the origin story of What'd You Miss?
Yeah.
By the way, from your Twitter.
From my tweets, yeah.
Joe is also the co-host of the Odd Lots podcast with Tracy Alloway. And let's give a round of applause for Joe.
Thank you.
Yes? All right.
Do you remember where we met? We've talked about this on there.
Where did we meet? I probably met you at Business Insider, like just visiting, no?
Maybe, but the first time I think we met was at Michael Jordan's Steakhouse.
Oh, that could be.
Remember that night? Do you remember there was like...
Oh, yeah.
Yeah.
2010-ish, 2009.
Yeah.
Wait, what were you doing there?
Well, we got dinner. I don't remember the crew.
He's a big Michael Jordan Steakhouse fan.
I don't remember like what the pretense was, but it was a crew of some of us.
I do. Somebody sent blind emails, to a whole group of the earliest financial bloggers, of which you were one, I was one, and was like, hey, there's going to be this meetup. Everyone's going to get together. And it was like, honestly, I think I met like 5 or 6 people that still talk to this day at that dinner. It was very bizarre. I think we were at Campbell Apartment first for drinks.
Yeah.
And then migrated upstairs to Jordan's Steakhouse. Anyway, you enjoying all this? It's fun for you?
I love it. You kidding me?
All right, good.
I love history.
All right.
I love history.
We have a lot to get to with you guys. The first thing is the aftermath of last night's Oracle report. We were going to just look at the stock market reaction. So Oracle was in a huge drawdown going into the number, and today fell 14.5%. Yeah. This is the worst, almost the worst day for Oracle going back to 2002. So it's a 4-decade-old company experiencing one of its worst days ever. It's 40% off its high.
Yeah.
Largest drawdown since the dot-com bubble. And this is in the context of an overall stock market making record highs.
Yeah.
So that's the interesting part.
Yeah.
Is that this didn't bring down the rest of the market.
I think that's really interesting.
The semis are at the high of the day right now. The stock market, as we just mentioned, all-time highs. The fact that this didn't kill the vibes is really interesting.
The band played on.
I've been thinking about this, which is the thing that we always say when we talk about the market this year. It's like, the AI-led market. It's AI is holding up the entire market. A handful of big tech companies and everyone else is doing badly. And yet, actually, so you mentioned Oracle. Meta is not having a particularly good year, right?
No.
The stock market is not perhaps as reliant on a handful of these giants as maybe people perceive. And the fact that like Oracle can tank and it doesn't take down the market should, as you're implying, like maybe cause people to rethink a little bit about the story that we've been telling about 2025.
But I do think that the sentiment has shifted a little bit on AI companies or tech companies themselves, right? And actually, Josh, I was listening to one of your episodes, I think it was a couple weeks ago, and you actually like enunciated it very well, this idea that we've moved on from the moment where it's just about the narrative and people throwing out big numbers into the air. Yeah. And we're getting into the point where investors actually care about whether or not the revenue is coming in to back that investment up.
There's this really interesting thing that happened this fall, and it reminds me of crypto. You guys had Sam Bankman-Fried on, notoriously, and Matt Levine.
What's in the box?
And Sam effectively explained his Ponzi scheme, or some of the crypto, not his. Someone else's Ponzi scheme.
Yeah. Matt Levine goes, wait.
But you could literally draw maybe not a price line, but a sentiment line the day before you aired that episode and the day after. The day after started a new chapter in the crypto market. It was 2022?
Yep.
Okay. Where people were just like, actually, I'm going to say this out loud. That sounds bullshitty to me.
Yeah.
People finally felt comfortable, like almost like the emperor has no clothes. And I think the parallel there was like what happened on Brad Gerstner's podcast with Sam Altman, different Sam. I'm not a big fan on backing people financially whose names are Sam these days. But like
you would back Sam Rowe.
Yeah, I was about to say
Sam Rowe.
Sam Rowe.
Sam Rowe is an exception always, right?
100%. 100%. His first name's not Bai. It's not Bai Sam Rowe. All right. So I would 100%. But my point is something shifted, not slowly, not gradually, but like he had a horrible podcast appearance of all things. Not even on a news network. No. Gerstner's like a shareholder.
He's an investor of the company.
He's an investor of the company. He asked a question that couldn't really be answered in a good way. And I was wondering if you guys have felt that seismic shift in the moment that it happened.
Well, these are the things that happen when your valuation is built on vibes, right? And I would say crypto is mostly built on vibes, and crypto actually does a really good job of adapting to the narrative. So, you know, it used to be an inflation hedge, the new gold, and then it became a play on the Trump administration. It's reinvented itself so many times.
Every year.
Yeah, really.
Yeah.
And AI, you know, for most of this year has been exactly like that. It hasn't necessarily transformed itself just yet, but it's certainly built on, again, that story that it's telling investors, which is at some point in the future, the trillions of dollars of revenue are going to be rolling in.
The thing about that moment with Brad Gerstner is when Brad asked that question, he thought he almost certainly thought he was lobbing up a softball, right? He's an investor in open. So he's like, okay, this is the question that everyone's curious about.
Not an ambush.
Not an ambush.
Not 60 Minutes.
And he's like, I'm going to, he's like, I'm sure Sam has some stock answer ready for this one. And so he thought he was like just throwing up an alley-oop. Yeah. And so the fact that it wasn't, and he was like, what was you want to sell the stock?
What was the question? You guys are making a 1.3 trillion in commitments.
So he said, you guys have $13 billion of revenue. How are you going to make $1 trillion in capital spending?
Like, Brad, I'll buy your stock back.
He's like, oh, but you want to short the stock? But there's two things. So one, I'm sure he thought that like he was giving him just an opportunity to explain the math, and he didn't. I also think what's really interesting about this, and you connect it to the stock market, which is that OpenAI is a private company that is very important to the public stock market.
Oh, yeah.
And so if you wanted to have a truly informed view on, say, NVIDIA or CoreWeave or any of these names, you would want to have some insight into the balance sheet and the P&L statement of a company like OpenAI. We're in this very weird situation in which there's so much riding on an opaque company. And so we're looking for these like little crumbs that we get from podcasts, et cetera. And that's the only thing we got.
Yeah, we said this in October. Yeah. We did a live episode with Kramer. I know you guys did too, by the way. I enjoyed that. And I referred to OpenAI as like Kaiser Soze. Like in Usual Suspects, he doesn't show up until the end. Like he's like not in the market.
Yeah, it's weird.
But everybody else is so reliant, or a lot of other companies are so reliant on the every pronouncement of Sam Altman. And it's not long ago where proximity to Sam Altman was like the most bullish thing on earth.
I know.
And now these stocks, they can't catch a bid.
Well, this is why we need tokenization. If OpenAI
stocks I was going to say that.
So, all right, if OpenAI was public, what do you guys think it would be down? Like if it from its high, 40%?
Let's put the high the day before the Gerstner podcast. Yeah, where is it today from there?
Down 40? At least.
That's an interesting question.
We are very good at this.
40 sounds.
Down 40 sounds like, I know they've reconstructed like OpenAI baskets, right? Where they have these proxies. So I know it's like NVIDIA and CoreWeave and a couple other companies that are perceived.
Oracle.
And then there's like the Alphabet basket. And that one is like Broadcom, which is doing phenomenally well. And a couple of these other ones that are seen as part of the Alphabet universe. And I think like, you could just look at that line and basically divert the Alphabet basket and the OpenAI basket basically diverged right after that interview.
So we're talking about the market at an all-time high, and just this narrative, it's only AI that's leading the charge. It's only 5 stocks. What a load of horseshit.
Yeah.
Like
Wells Fargo hit an all-time high.
Wells Fargo is ripping through through highs. So Microsoft, which is effectively another good example of a publicly traded stock that's linked to OpenAI, right? Yeah. Big investors, $10 billion.
Time. They're eating a percentage of the losses.
Yeah. So Microsoft stock, it peaked in July, and the stock is flat for a while. So it's this idea that it's just not just them.
But I got to say on Wells Fargo, this is the problem, right? Which is AI is so huge right now that it touches literally everything. And I'm sure there's an element of Wells Fargo that's like, we're going to fire all our workers and institute models, and investors are getting excited about that.
You couldn't be more right. like I was talking about the Hartford Group today on the air. This is a 150-year-old-ish insurance company. Here's how old the Hartford Group is. Do you know why it's based in Hartford?
Oh, that was an insurance capital.
It was. But do you know why?
No.
Okay, because you could stand on a roof and see the ships come in from England. Oh. And are you familiar with the expression, someday my ship will come in?
Sure.
If you were in the insurance business and you were insuring cargoes, transatlantic, Hartford is the right place to stand on a building and literally like a widow's walk.
That's amazing.
And actually see your ship come in. That's how fucking old this company is. Why is it rallying right now?
Aoi.
They spend more money more dollars of revenue than any other insurance company on technology. You talk to an insurance agent who writes a lot of policies, goes through Hartford as one of their carriers.
Yeah.
They make it the easiest to get a quote back. So like an insurance broker goes in, types their client situation, Hartford's and the whole story with the Hartford Group is that their AI investments are going to pay off before anyone else's. So you're exactly right. That's such a huge component of this rally in small caps and mid caps. The AI investments actually should lead to increased profitability next year.
That's the hope, right? Like people have been talking about this, like the next wave of the AI trade, so to speak, is at least in theory the companies that will get much better operating leverage.
We hope.
Right, in theory. I mean, so, obviously the financials, intuitively, there's a lot of opportunity. Because there was also that OpenAI deal with Thrive recently.
Yes.
And they're going to OpenAI is essentially going to be now a de facto equity holder in a bunch of companies that consume AI products. But intuitively, that's got to be,
healthcare, drug discovery, all of that should speed up. These companies spend so much money.
Accounting, law firm. There's no
all of these stodgy businesses.
So are we bullish on AI again?
All of it, absolutely. But all of these stodgy businesses, like accounting and law firms where AI is already penetrating, there is, they're following the PE playbook with venture style investing, which is very unusual. I'm excited to see how that turns out. But there is so much opportunity. And you're going to see this. At least analysts are expecting this to show up in margins for all the rest of these companies.
Yeah.
Daniel.
Well, so are the CEOs, because they're putting out the press releases going, we're using cutting edge AI all the time.
Fire chart 3A for me.
Fire.
That's not great though.
No.
From a sentiment standpoint.
Is that the cover?
This is today's cover of Person of the Year issue of Time magazine. It is the architects of AI. They won it as a group. I won my bet on Kalshi. I had Jensen Wang winning.
Nice.
And I still got credit for it, even though he's part of a group. And this is that iconic lunch atop a skyscraper image from, 100 years ago, whatever. So, first of all, I can name almost everyone except for one person.
Yeah, I can. I don't know who the guy on the far left is.
Is that Anthropic CEO?
No, the Anthropic CEO.
That's Mark Zuckerberg.
No, it's not.
No, the Anthropic's one is in the blue vest there.
It's Mark Zuckerberg. It's Mark Zuckerberg.
Oh, that's Mark Zuckerberg. You're right.
It is?
So it's Mark Zuckerberg, Lisa Su, Elon Musk, Jensen Huang, Sam Altman. I think that's the DeepMind guy.
That's the
the DeepMind guy.
That's the DeepMind guy that led to Gemini.
And then Dario Amodei, and then she's the professor at Princeton, I believe.
You are a certified dork. Take a bow.
Am I wrong on the last one?
No, she World something.
Oh, I'm embarrassed.
World Labs. I don't know her name.
All right.
I gotta say, Zuckerberg had a makeover.
I did a decent job.
Zuckerberg had a makeover recently. He looks pretty good.
Look, he's still got. They gave him the swag on the thing.
Yeah, that's right. Wait, is this the first time they've done a group as Person of the Year?
No, they've done some goofy shit. Like one year they did you.
Wait. I was actually just gonna say that.
They put a mirror on the cover.
No. Oh. That was a great call. Let's revisit that.
Because what year was that?
That was 2004, I believe, or maybe 2005. But that might have been one of the most given where media.
It was about social media.
It was about the dawn of social media. It might have been 2006.
Okay. Did they still have
it was a YouTube style image. Was there a better think about Babe Ruth calling his shot and nailing it? What transpired over the next 20 years or 19 years since that in terms of seeing. That was a great call. We made fun of it at the time, but they nailed it.
We did mock it, but it did turn out that was the dawning of this era where people were going to be uploading photos and videos themselves relentlessly.
Yes. Yeah, they called it. That's one of the great, it was maybe their best one ever.
I'm sure they've done other group. Didn't they have a group cover of the Committee to Save the World?
That's
from the financial crisis?
Yeah, that one, another one maybe. not as held up well for various reasons.
Who was in that? Like Geithner and
Larry Summers,
Paulson,
Larry Summers, Robert Rubin.
Oh boy,
and
Epstein.
Epstein.
It was not Epstein. Larry Summers, Robert Rubin, and
all right, can I read you?
And Alan Greenspan. Those were the three.
Here's what Ed Yardeni said about this cover. First of all, he doesn't like it, like me. He has a knee-jerk, like an instinctual aversion to, here we go again. There's some history here. Jeff Bezos was named Person of the Year at the end of 1999.
I remember that cover. His head was in a box.
Yeah, well, this is the cover curse.
The stock lost 90% over the next 18 months. Not great. I mean, it worked out okay. Elon Musk was the Person of the Year in December of 2021. 2022 might have been one of the worst years of his life. I mean, comparably speaking. He bought Twitter shortly after. His personal reputation took a hit. And then he became the first person in history to lose $200 billion in net worth.
But that's so
Yardeni's, I get it.
Yardeni's Twitter was the low.
His take is the AI trade is turning into a Game of Thrones.
Yeah.
In the past, the Mag 7 had their own kingdom surrounded by big moats. They each had their unique monopolies. Now they are competing with one another, threatening each other's kingdoms. So that's what's changed.
Wait, you said you don't like the cover?
I don't love when something becomes so obvious to everyone because it feels like, doesn't mean everything's going to crash. It just feels like how much money could there be left to make?
You want something a little more interesting.
I do, but it's not like it's Sports Illustrated for kids. Like it's it's a worldly magazine, and AI is the thing. So, but I hear your point.
The other thing. So, there's everyone talks about the cover curse. The other famous curse is the new headquarter curse, and of course, we're like a few blocks away from the new J.P. Morgan headquarters, which is a beautiful building. But we're in the moment of some curses. Apparently, it's like the biggest bank, which is another stock that's basically.
In fairness, though, to J.P. Morgan, they didn't break ground this year. That, what I mean?
Yeah, they've been doing it forever.
They've been building that for 10 years.
Oh, actually, I have a funny story about that new building. Remind me to tell you after this.
Oh, man.
Okay. What is there like a Freemason section in the building? Or?
Joe, I just got an email from somebody that works for us who said, that's Duncan, who said, tell Joe Weisenthal I'm a huge fan, please.
Okay. That's right here.
That's our guy.
You want to tell him yourself?
Yeah. Yeah, Duncan, he's right here.
Wait, no, that's not.
It wasn't from Duncan.
Oh, okay.
Okay.
All right, so.
Was there a Federal Reserve meeting this week?
Oh, yeah. I honestly, there was a lot going on this week, including the Odd Lots 10-year anniversary party. So I wasn't really
we were a little out
in
of
the
it
right
on
headspace, but I forgot about that, leading into
Did anything happen? They cut rates by 25 basis points as expected.
Yeah.
That's it. Nothing happened, really.
No. They announced $40 billion per month of T-bill purchases. That's the interesting thing. And a lot of people were actually caught off guard because the way they're doing it this time, it's not a steady purchasing. It's not like, you buy $40 billion at the set time every month and there's like a schedule. They say they're going to ramp up purchases ahead of moments where liquidity gets tight. So for instance, the April tax date, that's when a bunch of tax revenue comes into US Treasury, and because of that, bank reserves tend to get pretty scarce. So people are really interested.
That sounds like a good idea.
This is active liquidity management by the Fed.
Tracy,
wait, we don't do that already?
No.
Tracy,
well, not in this way.
Is this longer dated bonds run off because they mature, and instead of replacing them with the same maturity, they're opting to buy shorter term T-bills? Is that what they're doing?
Well, I think they're doing T-bills because the main concern is in the funding market, right? It's this repo craziness.
So they want to have overnight money sloshing around and available.
And banks are still refusing to use the standing repo facility for some reason. And, that's what it's there for, liquidity management, but they don't want to use it.
The one other thing about the Fed decision that is notable, there were 3 dissents, and 2 of them, so the Kansas City Fed President Jeff Schmidt and Chicago President Austin Goolsbee both voted for no cut. Stephen Myron, that was the 3rd dissent, he voted for 50
but cuts.
But this is very important when we think about 2026, because we know Trump is going to appoint someone who presumably will come in with something of a mission to get lower rates. We're all assuming.
Kevin Hatchett.
Kevin Hatchett.
Hatchett is coming in to cut rates to zero, as though it's COVID.
But
I came up with
the fact that there are 3 dissents to this one, the 2 hawkish dissents, means like he's going to have to do a sales job on the whole committee. And, like Powell got the committee around because as recently as 3 weeks ago or 2.5 weeks ago, odds of a rate cut for this meeting were less than 50%. Powell got the committee on board.
And the market.
And so it really shows like that whoever replaces Powell is hopefully has some clout within the committee. Otherwise, he's not going to be able to get what he wants.
So Bloomberg Intelligence reported that yesterday was the most dovish presser since 2021.
Whoa.
So you guys break it down. There's hawkish sentences, of which there were very few. There are moderate hawkish sentences, of which there were a little bit less. But dovish and moderate dovish, most since 21. I also didn't listen to the call. 4. And as a matter of fact, can we just cancel December Fed meetings? We're all too busy in December.
I agree.
Wait, how do they do? Sorry.
Who has time for this? It's AI, Josh.
Christmas parties are
They're
more
reading.
important.
They're reading the amount of the sentences that come off as moderate, dovish,
Text
and
analysis.
hawkish.
Can I just say one thing about the market reaction? So obviously a dovish statement from Jerome Powell was really good for stocks, as was an increased forecast for GDP next year, lower inflation, stable unemployment. That's like the dream mix for equities, right? But the really interesting thing about Wednesday is you didn't see that same reaction in the junk bond market. So credit spreads on junk bonds actually blew out a little bit on Wednesday, which is really weird because in theory, that same mix that's good for equities should be good for corporate debt too.
The one other thing too about I hadn't seen this chart until you guys showed it, but you're thinking about what made this a particularly dovish cut is the opening paragraph of the statement said inflation has risen since our last meeting and remains elevated. What is it? So think about what that means. The stock market's at all-time highs. Inflation is above target as it's been for half a decade. It's rising, and they're still cutting. So by implication, that is extremely dovish.
But they have 3 mandates. One is keep unemployment in check. 2 is moderate price increase.
And all-time highs in the stock market.
And 3 is not be sent to Guantanamo by Donald Trump.
Yeah, that's right.
So to satisfy the third part of the mandate is very important.
So this was the spark for the stock market. Leisman was asked if AI was a factor, what's going on out there when you get more growth without a decline in unemployment. And this is what Powell responded. And this is what sent the market higher. Powell said, so the implication is higher productivity. Haven't heard that in a while. And some of that may be AI. Also, productivity has been structurally higher for several years now. So if you start to think about it as 2% a year, you could sustain more growth without more job creation, which is maybe not great for society, but it's great for the stock market.
Everything is about AI now, even the entire U.S. economy. There was one estimate that I saw saying that 40% of U.S. GDP growth for this year came from AI. That's insane. That's more than consumer
productivity
spending.
directly?
I don't know how.
It was the capital expense.
Yeah.
It was the direct. But an interesting, I believe to some extent that AI is contributing to greater productivity. It's probably true to some extent. Well, the other thing interesting to think about is
rigging endorsement, Joe.
Do you believe it?
I guess.
But think about how tight the labor market was in 2021 and 2022.
Yeah, it was an emergency.
For the first time in years and years and years, companies couldn't take for granted that if they put a help wanted sign in the window that they'd get. So that forces companies to find productivity gains that they might not have. We can't find work. Oh, we're gonna you're gonna place your food order on an iPad.
Kiosks.
Now. Whatever. And stuff. So it's possible, and I'm not totally sure, but it seems at least possible that some of the productivity growth that we're seeing now is the fruits that are being born from when all these companies were severely resource constrained and had to find new ways to continue doing business.
I think that's definitely true, but I also think there's this thing now with every business owner I talk to, at least, they don't know to what extent AI is going to enable them to stop putting people in seats. And the bigger the company, the less they know.
Yeah.
So they know that AI is helping their coders code and helping their white-collar employees bang through tasks like drafting emails and reading documents. They know that for sure. I don't think most companies are able to calculate a dollar amount. But the further this goes, the more advanced it becomes.
Yeah.
the easier it'll get to measure. And like when you hear people talk about efficiencies, AI, job losses are the efficiencies. Like there's no other efficiency. We don't need as many people to do what we do as we thought we did.
Well, the thing you always hear from the labor market optimists, I guess, is this idea that, well, we're going to lose some jobs, probably a lot of jobs, but they're going to be replaced with new jobs for the new golden age of AI-driven productivity gains, right? And I'm really curious.
So many life coaches.
Yeah, I'm very
what
curious
are these new jobs?
to see what those jobs actually are, right?
Yeah, but what if employment counselors.
Yeah.
What if it's not job loss? Like, what if it's just like people that got into a house and had a mortgage prior to 2022?
Yeah.
What if it's like, listen, if you were in the labor market, you're good, but the pool of labor is going to remain relatively constant because we just don't need to hire as many new people, especially on the entry level.
This is what college kids are faced with.
I know,
and recent graduate unemployment looks like a recession.
It's going
to
be
the whole population was at that level.
That's going way higher. That's going way higher.
Yeah, for sure. I think this is not a forecast or anything like that, but one possible thing that I've been thinking about and I've said a couple of times is, okay, in any corporation, we've all seen the memos, you need to figure out how to use AI, right? Everyone, figure out a way. And so how do you establish, if you're a middle manager, that you are successfully implementing AI within your division? Well, you lay off 10% and say, oh, we're doing the same work with 90% with 10% reduction.
Point. It's like the proof.
But it seems like, so you don't actually really do anything with AI. You just prove it by firing people. It's at least seems possible to me that a number of companies will again find themselves short of labor, that actually they did not have AI-driven productivity gains, that these were layoffs because someone wanted to show that they were getting more lean. I also think Doge was like a sort of cultural thing where like lots of managers, like, we're going to do our own version of Doge and really see what's necessary.
Yeah. Firing was in.
And it may be that sometime in 2026 or beyond that we get a burst of catch-up hiring when companies realize, wait, we really didn't have the productivity gains to justify these layoffs. We actually need to hire
You're saying you think that's the way it goes?
I think it's possible. I think it's
okay.
possible that companies might find themselves short labor next year.
This is one of the things that we learned from the pandemic experience, or the pandemic really hit home. When you have these big disruptions, they set off like this extreme cycle in behavior where people either can't hire enough, so the next year they want to hire more employees and build like a backlog, a safety net basically, and then they find themselves bloated and then they fire everyone, and then the next year the same thing happens. It happened with housing investment post 2008 as well, right?
Yeah.
Home builders are still scarred from 2008, and we've kind of been trapped in a cycle ever since.
It's like a pendulum, and it gets
one
more
extreme to another.
Tracy, why are global yields rising? I don't know why I just said it like that.
But
question. We had the Fed cut yesterday, and yet, like the long end in particular, why is this happening? Daniel, chart on, please.
No segue. He just goes right in. Let me say.
Oh, good chart.
Yeah, what is this? What is this
We're
about?
looking at...
Although, I got to say, it's funny, though. It's like, oh, look at Japan. But it's important to note
1%.
for viewers at home that that's on the left side of the scale.
Yeah.
So what looks like the highest is actually still far and away the lowest of the long end.
But what is the story here?
That's
seriously.
I mean, I think it's a mix of higher inflation and economic growth expectations. And even though everyone's talking about the U.S. stock market today, like the European stock market has had an amazing
one of these stock
year,
markets
right?
had a good year.
Yeah,
really well.
exactly.
Yeah.
So yields are following perceived economic growth and prosperity.
I think two things that there's so much that's happened over the last few years, but I think that another big phenomenon that has nothing to do with AI is, so we know that there's some kind quasi-deglobalization happening, at least in the specific sense that every country feels we have to have our own semiconductor fabs.
Yeah.
We have to start
Defense.
That's
Yeah.
right. So you have this combination, and when you reduce trade, that's anti-productivity, right? Because we can no longer outsource as much as we want. So you have this anti-productivity phenomenon coupled with increased spending, because that's how you get all this self-sufficiency. So you have more money coming into a less productive system. I think there's good reason to think that inflation over the medium to long term will just be higher than it was due to just the combination of those two factors, and that's how you get the sustained higher yields.
It's nice that deglobalization is good for investors, but also the globalization story was also good for investors.
Always good for investors.
It's always good
it's
for
always
investors.
good for investors.
Well, no, because like if you're in Europe right now, you don't want to see a repeat of the internet where 4 companies in the United States are selling you everything AI related.
Yeah.
So the French are backing Mistral and they're trying to foster all of these startups, and the Germans are rearming, which I never thought I'd be so bullish to hear a phrase like, hey, look, the Germans are rearming again. But there are all these Eurocentric economic growth drivers now that did not exist even like 2 years ago.
Yeah.
And those stock markets, they look like our market or better in many cases.
As Joe would say, capital H history, right? Like it's an actual shift in world global history.
Well, you remember like
Trump has been a catalyst for, I think, waking up Europe.
Yeah, he has. I mean, you remember like after 2010 when the Euro crisis, it was like, when is Germany going to spend some money?
Well, 15 years later, you got your answer.
And then 15 years later, it's like, oh my God, we've been waiting for this forever.
All it took was the second term of Donald Trump and a Russian invasion
and a war.
of Ukraine.
And their next door neighbor.
It is funny. You guys like started your career. Maybe not started, but austerity was the word, one of the words of the decade.
How did that go? The whole austerity thing it wasn't great.
Well, you know what I think about that time, which is very strange, is these days, 2025, the idea of austerity seems so alien, right?
Oh,
either party, right? No one has any appetite for higher taxes. No one has any appetite for cutting spending anywhere, right? And this is the case in the U.S., and it's the case in Europe. And it's really hard. Like, wait, what were the political conditions in 2010 that actually elected leaders felt comfortable doing austerity? Because that seems like another world now.
We had these 2 old codgers, Simpson and Bowles. I hope, maybe they're still alive. I apologize, guys. They were doing this national tour with the deficit shtick, and they were like folksy and old timey.
They did a rap and they had puppets.
They were rapping and they were
rapping about the deficit.
There were YouTube videos. That was so. What was the zeitgeist? That was the zeitgeist. It was like popular post a financial crisis to say if we don't get serious about deficits, it's going to happen again. Thank God we didn't get serious about deficits because
then we would have.
We haven't had a recession yet. 15 years later.
I think the crisis had a lot to do with it.
Is there? Say more.
Oh, well, what was I going to say?
When you have a crisis, the natural instinct is let's cut back on spending.
Yeah. Well, okay, what's remarkable about the Eurozone crisis is it wasn't just countries imposing austerity on their own people. It was also, the European Union at that supranational level imposing austerity on its members.
The North against the South.
And contrast that with the moment today where, the EU is trying to hold on, but in general, it feels like everyone is going in their own little direction. It seems impossible to think that would happen now.
One of the standout performers amongst European stocks rallying are like Italian banks. Greece is doing well. Like tourism-driven countries are actually outperforming industrial manufacturing like countries like in the North. And it's kind of interesting where like the roles have sort of reversed.
I like the idea of Europe as like a tourist destination for people who want to look at like a non-capitalistic society. You just go there and watch the French drink wine at lunch and stuff like that.
Protest.
That's right.
Guys,
set things on fire.
Speaking of bubbles, is there a bubble in money market funds? There is $8 trillion and going up every single day. It's really incredible when you consider the context and the backdrop of the stock market.
Yeah.
And the fact, I mean, it's just.
But what you're showing in the bottom pane is
money's not moving.
Yields have come down from 5 1/3% to 3.86%, and it doesn't matter.
But it looks like it looks like it's like going vertical. The institutional money market funds.
I just think if you have money that you don't want to put into risky assets, if you don't want to put in the stock market, like then you just want liquidity, right? And you're still getting paid almost 4% for.
You're still beating inflation.
Yeah, you're still beating inflation or pretty close. Why are you like reaching a little bit for that extra 40 bips?
It sounds like somebody's sitting on a lot of cash. Joe, come on, put it to work.
Okay.
Is that cash on the sidelines?
Joe, put it to work.
You guys, I don't know.
Have
we established whether that's a myth or not?
It's a riddle. It can't be answered.
This is absolutely cash that's on the sidelines.
You know what's funny? It's like
yes, but if it comes into the stock market to buy, that means someone has to sell stocks to them,
I know.
Which then goes into money market funds. So
there's all these
riddle.
people. I know there's all these people that are like, there's no such thing as cash on the
No,
sidelines.
this is
this is it.
literal cash, and it is actually on the sidelines. Now, the idea that for every buyer there's a seller is true, but also guess what? The stock market goes up every day, and that's not every day. The stock market goes up guaranteed every single day. But it's
Can you promise me?
yes,
that?
of course.
Nice.
It's positive sum.
Yeah.
And this is like the big difference between this and the prediction markets. I won't call it betting. Is that
you can call it betting.
I'm kidding. The individual
Yeah.
gamblers, somebody wins, somebody loses.
Yeah.
And eventually people are going to get tired of losing because you lose more than you win because the rake is so high. Not just in prediction markets, but in gambling markets, betting apps. Like you are going to lose because there's a rake in there.
Yeah.
And eventually people are gonna be like, this isn't fun anymore.
Yeah.
This was one of the things I found really interesting when we did that episode with the sports bettor. This idea that, like, if you're actually good at sports betting,
Nobody's actually good.
Well,
but if
in
you are,
theory, if you are, like, the house actually cracks down on you and starts limiting the size of your bets.
Literally.
So all these guys are making new accounts constantly and starting out by making stupid bets so that they look bad.
That's right.
And then making the big money.
Can I say this? God. Actually, I want to like rant a little bit about this because
turn on the TikTok camera.
No, you have all of these people, and they're these there's professional cynics on Twitter, and they're like, oh, the stock market's like rigged, and only like the big guys win, and we're creating these new assets, crypto and prediction markets and all this stuff that's not rigged like old Wall Street.
It'll never get rigged.
But it's like, look, are there issues with the stock market? I suppose, but the U.S. real legacy capital markets is probably the fairest, most democratic, legitimate market to have ever existed in history. You pay almost no spread. The scale of manipulation and insider trading is so marginal in the U.S. stock market. If you're really good at investing, they don't kick you off. They don't kick you off the Schwab platform or wherever you trade. It is. And it's rare because if you look around other countries, and including very developed countries, I mean, go up north to Canada. They always have frauds. Every time a company gets big, the entire Vancouver Stock Exchange, these penny ante junior gold miners that you have no idea. U.S.
AIM
capital
in the
markets
UK is another one.
Yeah,
right?
the AIM in the
Tracy,
UK.
do you want to apologize to your Canadian listeners?
Oh, I can think of one in
Joe.
particular who's going to be upset. Luke Kawa, I'm so sorry.
sorry,
I
Luke.
apologize for Joe's behavior
We love Luke.
again.
Hey, Joe is cooking.
But seriously, U.S. legacy regulated capital markets are so good. And the fact that there are so many people sending this message, oh, it's all rigged, only the big guys,
Do you hear as much
could not be more
Do you
wrong.
hear as much of that, though, as we used to hear? I'm not on Twitter for 6 years, so I don't know. But
so smart.
is it the same level of distrust?
No.
Because I feel like now it's all gambling and it's nihilistic, and it's I know it's rigged, and I'm part of the rigging.
I think the nihilism part is important, right? It's not that people don't think that this is crazy behavior. It's that they all think they can make money off of it, despite it being crazy.
The rigging. Here's what's so funny about the rigging stuff: the people who probably were complaining the loudest about how it's all unfair and it's the Jews, whatever it is. What actually ended up happening is those are today's Robinhood users.
Yeah,
and 100% they're giving a penny to Citadel every time they trade. And you know what? They don't give a shit anymore.
Who cares about it?
Nobody
that's
cares.
The thing. This idea is Citadel
came in for order flow.
Okay, fine. Citadel gets a penny.
Do you remember Brad Katsuyama?
But that's the rigging.
Yeah, but it's crazy that
yes. So the HFT scare was that was a crazy moment.
So Brad was on TV arguing with the guy from Bats. It's rigged. You're taking a penny per trade. It's yeah.
It's a penny.
But do you remember the Michael Lewis book on HFT? Did you read it? Yeah. There's a passage in there where he describes a guy who's about to place a trade on his computer, and he hovers his arrow above the buy button.
He almost got scammed for a penny.
And then he claims the price moved because he hovered his cursor on the button.
Oh my God.
That's how outraged people were at that
Paranoid
time.
Can you believe it? The bid-ask spread grew by half a cent.
All because of me.
That's the.
I mean, it's crazy because people don't remember.
But that was the rigging people. That was what they were complaining about.
Because for a long time there were no increments of stocks between 1/16th, right? That was before decimalization, it was fractions. So there was a period where first of all, the bid-ask spread was a minimum, whatever, 1/16 of it.
Bro, I used to sell people stocks at 10 1/4. That we were making markets 9 and 7/8 by
and
10
then there was a
and
massive, it was like a really big deal that in the late 90s online you could get a $10 commission. So I have no patience for these people worried about like, oh, I'm like Citadel gets a penny here.
There was this whole category of financial blogger back then.
Yeah.
Whose whole shtick was the markets are rigged, therefore you should not invest.
Well, zero hedge still exists.
So guys, Vlad was on with us 2 weeks ago talking about prediction markets. Kalshi raised $1 billion in new funding at an $11 billion valuation, which is twice the value that it raised just 2 months ago. They raised $300 million in October, which is insane. On Robinhood's most recent call, the CFO said that prediction markets reached an annualized revenue run rate of $100 million within a year of the launch, which is their fastest in history. And October volumes put the run rate at closer to $300 million. Here's my take on this. As I mentioned, I think the individual gamblers are going to get tired of this, right? 90% of the volume on Kalshi in October was sports betting because the CFTC said, okay, fine, you could do it now.
So that allows them to preempt state laws.
So that was the explosion. But Chris Dierks, this was a Bloomberg article actually by your colleague, and I want to give her credit, Lou Wang. She said, or he, I apologize, why it's harder to tell gambling from investing nowadays. So in the article, they quoted Chris Dierks, a pro sports bettor who used to work for Druckenmiller, okay? So he works for a company called Novig, a sports-focused prediction market company.
Oh, Novig.
Yeah, get it? Novig.
I actually didn't. That's
even good. I get it.
I met some Novig guys.
That one escaped you?
Yeah.
Okay.
So he used to work for Citadel and Jane Street, and when it comes to sports betting, in his view, the deck is stacked differently. Quote, I don't want to compete against the smart people. I want to compete against the dumb people, he says.
Same.
What has the highest volume markets in Robinhood is going to have the dumbest customers. And that's where I want to be.
Yeah.
Well, this is the problem, though. Everyone thinks they're smarter than everyone else. This goes back to the idea that, like, no one thinks what they're doing is, like, actually going to pay off in the long run necessarily. It's all short-term bets, thinking that you're going to get out before everyone else.
But the difference is you can be dumb and still be profitable over time in the stock market because stocks are biased to go up. Guess what? Sports betting that ends tonight, they're not biased to go up. It's zero sum. You're not going to make money. So I think people are drunk on this spectacle right now. I do think that it can be a big market. So for example, if you're a hedge fund and you want to bet that the Fed is going to lower interest rates, and you say, okay, so I think that that's going to impact inflation this way and the dollar this way. Why not just bet on the prediction markets? But guess what? You could do that on CME. There's derivatives for that already.
So I have a few thoughts. So one is like a good prediction market that could be very useful is like, all right, I have a position on Tesla, but I want to hedge the exposure of like their car sales. So you could bet the car sales.
Great.
The problem is there's no volume on that market. There's there's no volume
today. That could change.
It could change. It absolutely. But like it as of today, this is not a useful instrument for institutions. Now, on this point, like about what's going to happen is, you have to you have to keep bringing in fish into the tank to feed the whales. Eventually, people are going to lose money, to your point, and then it's going to drop. And what I think is the real risk is because there's no insider trading laws or as such, or it's not the same, like you would be very skeptical. There was this incident, I think this week or last week, where there was a market on who are going to be the most searched person on Google for the year, and someone like nailed all of the bets. And
there
was
the
speculation, speculation that they were
Google.
But if you think that there are like insiders who like really know stuff, why would you ever participate in that market?
Here's a more practical example. There's a bet right now. Who will win Warner Brothers? Netflix.
That's useful. Yeah.
Right. So Netflix or Paramount. If you're a lawyer working on the deal, you owe a duty of care to your client. You obviously aren't going to bet that. But let's say you just talk to people that are involved in negotiations, and somebody says, David Ellison's so pissed he's going to walk away from the table. I don't know. Is that insider trading if I bet it on Kalshi versus if I go in the stock market and try to express that using options on Netflix? I mean, I'm sure it is. They'll try to make a case on it. Someone's going to be the example, I guess, is what I would say there.
But that, like, so a market, I mean, I agree. And I don't know how the law is ultimately going to shake out. I mean, the two things I'll say is I really think that
there will be a test case of somebody doing that.
And I think that if the prediction market companies should want there to be some regulation, because again, if you want to have random people participate in this, it would be nice for them to know that there aren't sharks who have all the inside information who are going to win every bet against them. But the other thing that I'll say, like, that strikes me as potentially a very useful market if that ever got, like, if these sort of like deal markets ever got to be liquid. It's like, okay, it's right today, it's at 65%, Netflix at whatever. Tomorrow it's 65%. That could be a very useful instrument.
That's great
for traders.
The election outcomes are very useful now.
But say it's the same idea, because let's just say that Paramount wins the deal or loses the deal. Who's to say for sure how that's going to impact the stock? Just bet on the outcome.
Just bet on the outcome or hedge out the outcome.
I do think that a few things. I do think that the prediction markets are going to grow. I do think that there will be liquidity. There's none right now. I tried to do a bet and I moved it from 60 cents to like 90 cents. Like, honestly, there's no liquidity there. And also, there's no way that it's going to, not no way. I would be very shocked if it does anything remotely approaching equity values or trading like that. Like, the idea that it's going to migrate there seems far-fetched.
I am going to make a prediction that you could bet on, though. We will see the launch of a prediction market hedge fund.
Well, this is what I was about to say, right? So you're seeing financial institutions get into this space. So we had Cliff Asness on the podcast a while ago. They're exploring sports betting. The CME,
Susquehanna is providing liquidity on one of these exchanges.
The CME is doing these like kind of weird little contracts where you basically bet on the number going like up or down.
Dude, Novig is a sports-focused prediction market company. Like, they're there.
So the one thing I will say, and this actually
one of these Twitter know-it-alls, though, that you guys hang out with is going to launch.
That's right.
They're going to say, I am so good.
It's actually going to be me and Tracy.
I'm so good at knowing how everything in the world is going to turn out that I am willing to charge people 2 and 20% to find out. So I'm going to do it.
So here's something that I think will actually be interesting. And it actually gets back to the first thing that we were talking about with OpenAI, which is I suspect that we're going to see a greater maturation and more liquidity in various, whether they're tokens or contract markets relating to private companies. So that, because a prediction market can be structured as de facto equity, right? It's like, is OpenAI going to have a $55 billion or whatever, $550 billion valuation as of X date or something? And you can start betting that. And then the more narrow you specify the contract, the more that line essentially starts to look like OpenAI stock, et cetera. And so I do think like this idea that I've been thinking about a lot is I think the difference between a private company and a public company, which used to be a very binary thing, it's going to look more like a spectrum of degrees of publicness, where the spectrum is going to be, on the one hand, you're going to have highly liquid companies with a high degree of transparency. And on the other end, you're going to have illiquid companies with very, very moderate or very little transparency. And everything would just fall into the spectrum, but it'll all be tradable.
Well, let's go there right now, because there is a private company that is changing hands on a daily basis in the private markets, and that's SpaceX.
Yeah.
There are probably dozens at this point of SPVs or venture funds that bought it from somebody who bought it from somebody. Yep. That stock is everywhere. Yeah. I know lots of people who are invested in SpaceX who have nothing to do with the venture world. It's like sort of exactly what you're describing. It's this combination
I think
of
we're going
public-private.
to say the same thing, which is like the problem with all this opaqueness is you can't tell relationships within the capital stack to each other. So like, again, like you're only seeing a slice potentially of what's going on with that company, and you don't know what else is going on behind the curtains.
Well, the other thing I was going to say, we did an episode with the president of Perplexity, and he was talking about how they have to be sort of discriminating. You know, people always want to invest in these companies, but they do not want to let an investor in who is really not actually interested in the company, but just interested in creating a vehicle such that private investors can trade and get access to Perplexity.
That's what happened when Vlad announced tokenized private companies.
Yeah.
There was a blowback.
Yeah.
And they sort of stopped talking about it.
Yeah.
Because I think a lot of people who are executives at privately held companies, don't you dare list my company. Number one, you're misleading people. They think they're investing in it. And meanwhile, they're buying
NFTs.
Yeah, they're buying like a facsimile of a stock certificate.
They're buying
a
company that owns a company that owns a company that owns a company that owns shares.
A shadow of a company.
So guys, also this week, SpaceX said they're moving ahead with plans for an IPO. They want to raise more than $30 billion. This will obviously be the biggest deal of all time.
Yeah, 1.5 trillion at valuation. I think they're aiming for.
So Saudi Aramco raised $29 billion, which I think was
I remember that,
the record holder, and this will leapfrog over that.
Is there that much money in the market for these companies, like in public markets?
So I want to do a prediction market with you guys, though. Does this happen in 26?
The SpaceX
just
IPO.
the IPO or the IPO plus the valuation you just said?
No.
Oh,
no.
Just the
no
IPO.
parlays. No parlays.
It's a parlay.
Give me the bet. Yes or no? What do you think?
I'm going to go with...
How much would you put on
hold
that?
on. Wait, where is the yes and the no? I would say the no is...
50-50.
Okay, 50.
The company is saying we're doing it.
60,
I should
40.
point out, the company is saying
all right,
that they're doing
yes is 60.
Yeah.
I'll buy no for 40 cents.
Okay.
Elon owns 40% of this. If it goes public at a $1.5 trillion valuation.
As Sam Rowe would say, that's a lot of money.
Well, no. So here's my next question, though. Isn't Tesla the loser? Because right now, the only way to invest directly in Elon Musk for 99% of the population is Tesla. And now I'm giving you Diet Tesla. Like I'm giving you an alternative.
Tesla.
Space Tesla.
Well, now you could have Space Tesla.
Yes.
Wait, aren't they going to merge?
Well, when one gets in trouble, the other one will buy it. Yes, of course. We understand how that works. But isn't that interesting?
Yeah.
Now, 2 Elon vehicles, does the enthusiasm cancel itself out across those 2 market caps?
I never really thought about
It's a
this
good question.
Yeah, I hadn't thought about that.
I'm very clever.
I mean, on one serious note,
I think it's going to go public. I'm going to take the yes.
Yeah, so, I mean...
$4.20 per share? $4.20? Anyone? Come on. It has to.
Yeah.
It almost has to.
On a serious note, you could see why it's seizing, the company seizing this particular moment, which is like government spending is just not in vogue, like we were talking about earlier. And so this idea of private companies stepping in to perform government functions or things that were done by government bureaucracies or whatever earlier, you're seeing that with NASA, right? Like SpaceX is kind of like the only game in town.
And he has Starlink revenue, which is not dependent purely on although governments are big customers, is a commercial business there that could be a monster business as more people trust it, especially if it's publicly traded.
This is the replacement of public services, public entities with private capital. And I think that's going to be like a really big trend.
Can I read you something from one of the Bloomberg articles about SpaceX? They expect to use some of the funds raised in an IPO to develop space-based data centers.
Well, of course.
Oh, yeah.
Including purchasing the chips required to run them.
Space chips?
Guess what? Like, we laugh. Like, that's going to happen. Like,
I saw that.
Gavin Baker was saying that with Patrick, that there are going to be data centers in space that use the dark side of the moon to cool the liquids or some shit. I don't know. It's way over my head.
We can't even figure out how to...
I don't know why, but I'm in.
We can't even figure out how to like reliably cool data centers on Earth, though, right?
Exactly.
Like,
they got to go to outer space.
They're not building a data center in space. They're going to drag one up from fucking Idaho into orbit. They're going to, I think the idea is that you're using the sun's rays to power it,
which
is free. I mean, once you build it, and then
you just turn your back to the sun,
and then space is very cold, so it'll be self-cooling at the same time. So I mean, it's obvious.
I'm short. Okay,
It's obviously something we should all invest in.
I think in the next 10 years, I do not think that there will be a data center in space.
I do. I would say
so?
I would bet yes. Yeah.
Okay, that's good. All right,
data center in space.
We'll revisit this.
You would bet that based on what? Just because they're saying it?
Yeah.
Oh, I would have no idea which way to bet.
But your faith in Elon Musk,
He'll just do it. If he's saying he's going to do it, he's probably going to try it.
I genuinely believe that there will be data centers in space.
All right. Well, that's good.
Now, is it outer space? Now, I don't know where outer space begins, but...
All right, we got a couple more things to bang through with you guys. Right. Daniel, can I please have chart 12? We don't have to spend a million hours on this. This is from Chart Kid Matt.
We were going to segue from prediction markets into this.
All right, so this is from Chart Kid Matt, who is obviously a part of the Compound, also runs a charting service for financial advisors called Exhibit A, and he is showing that in 18 of the last 26 years, the stock market actually outperformed the average of all of the Wall Street strategists. So 70% of the time, actually, strategists aren't bullish enough. Doesn't that fly in the face of this narrative that Wall Street's always bullish and always pumping up? It turns out it's the opposite. And I've never seen that. I've never seen it displayed that way. What do you think about this?
It's a cool chart.
I mean,
it's a great chart.
Wait, I have a question. Are the estimates based on like the macro analysts looking at the S&P 500?
The strategists.
The
guys that have stock market
So
targets.
this is key because I think if you're a corporate analyst looking at a specific company, the bias generally is pretty bullish. And I'm kind of amazed that you still hear so many people saying great quarter on calls. I guess it's like a joke.
Congrats on the quarter, gentlemen.
It's a joke between them now, right? But I think the macro strategists, like, you're kind of biased to try to find the non-obvious story. That's right. Yeah, you want to make a name for yourself.
The next chart is even better. Daniel, chart 13. So this shows it by year. So the y-axis is what actually happened for the year.
We will send you these guys, by the way.
Yeah, thank
you. And
you.
the x-axis, so like 2003 strikes me as something really interesting. They expected a 25% gain. And they were right. Like, credit to them for not throwing in the towel after 3 really shitty years.
Where's 2003?
Top right.
Oh, yeah. Okay, there it is.
It's like 2008 as an example. Listen, nobody could see the future, but they expected a 7% return right down the fairway, and actually
it fell 40%.
Very close, though. It was. I think it's an interesting. So because we're in strategist target season now, we have one more on this chart 14.
The happiest time of year, macro outlook season.
And I read all this shit still, and I know better, and I still read it because I find it helpful to just hear what people think, right?
Yeah.
And that's why they write it. They don't consider themselves to be Nostradamus.
No, they don't. And I think it's useful, and I think like it's good to put a number. And most people they want to see the thinking behind it, right? Like I don't think you're gonna like dump your macro strategy. Like, oh, you said it was gonna be up 9%, it was up 18%. But you want to see like what was their reasoning? How did they work through this? How did they bottom? What are their?
Yeah, I read Playboy for the articles.
Don't forget, the clients want to know what the banks think.
Yeah.
Obviously. We're giving you all this money to invest for us, or we're trading with you.
Yeah.
Like, what's your view?
And speaking of Canada, what is Scotiabank's problem?
All right, wait. So let's
bro,
hold on.
Come on, dude.
They're at 63.78. Isn't the S&P higher? Come on.
So let's set this up. This is Wall Street Strategist 2026 S&P 500 targets. The average target for next year, 7,512, which implies from yesterday's close about a 10% return. What? It's like magic. About a 10% return for the S&P.
Give or take.
Which relative to recent years is actually on the bullish side. Because 2 years ago, I think the call for 2023 was flat.
Yeah.
And of course, we went up 30%. So I don't know. I find it's interesting to just see where people's heads are at.
Can you just pause for a second? It's insane that like we have this thing in America that by and large, like that it's like 10% year after year after year. It's just like free money. No, I'm not going to jinx the top. I just think that the returns to the market in America have really been extraordinary.
Did you see the bank on that chart that's like bang on 10%?
Oh, there was one?
It's UBS.
Yeah. Amazing.
Of course it was. It's a shortcut.
Yeah.
Can I tell you that 10 years in podcasting, you're kind of like The Simpsons. Like this,
we're still funny though, right?
No, still funny.
We're The Simpsons, except we're still funny. No, but
just like think about most of the financial podcasts that exist today were started in the last 24 months.
Mm-hmm.
Most of those will not be here in 24 months. Okay, that we know, but you guys have longevity. That because I'm trying to think of what shows.
Or Lindy.
They were Michael and Ben were early. They were 2017.
And I felt late.
And they felt late.
The only ones who I know were before you is Patrick and Barry.
And Barry. And
that's probably about it.
Wait, was Barry Masters in Business?
Yeah, that was before us. Yeah.
Although wasn't it a radio show for a while?
Yeah.
Although I guess it doesn't really matter.
But it started before.
Asterisk in the record book.
Oh yeah. No, Barry was definitely around.
Well, you guys are incredible, and I don't listen to every single episode.
No one does.
But anytime it pops up in my feed, I never turn it off because it's always good.
That's very kind.
So I really feel that way. You guys are like two of my favorite people. And getting to listen to the two of you and your guest selection, I would say, probably you guys, Meb and Patrick, to this day, the best guest selection. Like you guys talk to people I've never heard of, and I'm doing this shit 30 years. And you talk to amazing people, and I'm like, where do they find this person?
That's the most satisfying part of the job, actually. Yeah. One of the things, it's always fun to have a big name. It's always fun to land,
Assness.
Even Reed Daly right. I love those guys. It's great to chat with them. But there is literally nothing more satisfying than finding that person no one has heard of. And it's like, oh, that person's amazing. Like that's the dream when we find those people.
The thing that I'm quite proud of actually is that we built the podcast on exactly that, on finding the experts or the best person to talk about exactly, a topic that was in the news. We didn't, now we get the big names, but when we started, we definitely didn't. It was, mostly people that you never heard of.
But you know what else you guys do? You make people famous because there are a lot of people who are now considered the it guest on a topic that I heard for the first time on your show.
Wasn't the Flexport guy?
Yeah.
You guys were the first to put him on?
Yes.
The great analyst covers NVIDIA, Stacey Wasgon.
Yeah, he was.
I heard him on Odd Lots a year before he was on CNBC.
Great.
But you guys have done that with a lot of category people who are now the go-to. But I think you guys have contributed to their.
We've had people testify in front of Congress and stuff like that as experts.
Guests call in, talk to the White House during the Biden administration.
Okay. Yeah. Who's the worst guest you've ever had? Tracy, you go first. She's going to answer.
I'm not going to name a specific name.
But you have that person in your head. Where's Oz Perlman?
Yeah,
pull it out of her.
I was just thinking the same thing.
We need a mentalist in here to pull it out of her.
Here's the thing. It's someone who didn't end up coming on the show.
Oh.
We're obliged. I know.
We have one of those.
Not say we made an agreement.
Yeah, we have one of those. Banned for life.
One person. One person. We really can't say it. Don't try to ask us more questions because we actually made an agreement. There was a incident not that long ago in which we had a guest who was very reluctant to do podcasts, and they were sort of not sold on the premise of podcasts, but their PR person sort of convinced them, oh, Joe and Tracy are cool, whatever. And they came on.
It's an older person.
We're not going to say anything.
No clues.
No clues.
All right.
No clues.
Okay.
Because we made an agreement that we were. And the person heard our intro and was not thrilled and walked out of the studio.
Oh, that jokey, talky thing that you guys do. They overheard that.
They were in the room because we always do the intro with the person in the room, and they're like,
Jerome Powell.
No, I say Carl Icahn is that sensitive.
They basically said nope and got up.
This is not what I signed up for. Yeah.
Oh shit. So we never had it quite that bad. We had somebody that we invited and they said yes and then blew us off. And then we had one person, I'm not going to say the person's name either, who was so obnoxious to Nicole that I basically said, I don't care if this person literally invents cold fusion tomorrow. That person will never be in a room with us. So we've had but it's very rare.
But it's rare, yeah.
Most people are so happy to just be part of the conversation.
We had one episode. It was actually, so people have asked us, did you ever have a episode that you didn't air? And there's been a few, but there was one, and it sort of
Kanye West.
There's been a few. There's not many, but there's been a couple. But this one sort of has a happy ending because there was someone came on. It was not a good conversation. We didn't know what to do about it. So I sent an email to the guys look, I really appreciate you coming in. I don't think the conversation totally worked. It's something was just off about the whole thing. I don't think our listeners are going to like the vibe. I think we're just going to shelve this one. And he responded. He's like, thank you. I know I sort of whiffed. He's like, I was not on my A.
Oh, we had one of those. Yeah, we had one of those.
And he's like, thank you for not airing it. It was actually so.
But we aired it. We aired it. No, you know what? We had somebody who's such a nice person, and they were a huge fan of the show, and I think they got really nervously excited sitting here.
Yeah, that happens.
Mm-hmm. And I felt really bad for him. I still press publish. I want to congratulate you guys though on 10 years. It's super cool. What is next in the Odd Lots universe? What can your fans and our fans look forward to?
Honestly, I think it's more of the same.
Yeah.
It's basically having great, interesting, engaging conversations with the perfect guest. That's it. It's a very simple premise.
You do it better than anyone.
Thank you so much.
We're friends, but we're fans, and we're so happy for you. Aww. Round of applause for Joe and Tracy. You hear the audience? We can't get enough. Hey, can we show this picture though? Daniel, chart 18, please. So this is you guys on Instagram. And you guys look great. You're like a brand.
That's a great photo.
It's a great photo. That's a real these are real
we
camera
had an
taking
odd
these.
lots.
We had a cake, yeah.
It makes so much of a difference when a real camera is.
It really does.
I know.
Does.
It really does. It elevates.
I know. It's like, it's like,
you
forget what a real photo.
What were the names of the drinks?
That's our team, by the way. I just wanted to say Carmen Rodriguez, Dash Bennett, and Kel Brooks did it. It's a 5-person operation. Only me and Tracy tend to get all the attention for obvious reasons. It really is a team effort. So I'm glad that we have that picture.
That's
there.
really awesome.
And that the articles about us and stuff, it never mentions their name. I always feel bad about it.
That's super fly to acknowledge everyone that's a part of it. And you guys, work a little bit harder. You might get 6 people helping on the team. Who knows?
Who knows?
All right. Everybody, if you are not subscribed to Odd Lots and you like this show, I'm pretty sure you'll like that show. Most of you are subscribed to both. So it's just, it's an amazing thing. And here's to another 10 years.
Thank you.
Absolutely.
All right, guys, thank you so much.
We'll be back in 10 years on the countdown.
Yeah, that's right. That's right.
Guys, thank you so much for watching. Thank you for listening. Like button, subscribe button. Thanks to the crew. We'll talk to you soon.